predictions, and it's to get the media attention. I do think that individual investors can miss out on some great opportunities because the analysts are just trying to get themselves on the map. I mean, phooey to that. And Axeman making the point here that predictions often overshoot in either direction. Absolutely. That's absolutely right. You know, it's a little different. I kind of make a distinction between the general market predictions, such as the Dow is going to hit this amount. I mean, I've talked before about the Dow 15,000 call that a very prominent financial publication made earlier this year. And some very smart people, very nice people. I know some folks over there, but, you know, they made a prediction of Dow 15,000. Really to make headlines and sell papers, and that's okay. That's what they do. I'm not mad at anybody. Axeman is saying predictions are for Muppets. Yeah, I think I kind of agree with that. I was watching a kind of along those lines of predictions being for the Muppets. In other words, in Goldman Sachs terminology, kind of the little people. I guess I'm channeling the late Leona Helmsley right there by saying the little people, but I think that's about the same as the Muppets. You know, I was watching a strategist from one of the investment banks this morning who was talking about some of these, how that particular bank had adjusted its target for the S&P 500 for the year, and then she went on to talk about just a whole number of different events that may or may not affect the target going forward. And you know, again, that's very nice. She gets to spend her days in these sort of intellectual exercises, crunching numbers and analyzing the market. It sounds like a fun job. Sounds like a nice way to spend your days. But really, ultimately, then these numbers become meaningless, and let's be honest, it doesn't help us as individual investors. You know, a lot of people will argue you should jump into stocks based on these predictions, but the problem I have with it, it doesn't give you a meaningful strategy for risk management. Remember, nobody knows what will happen. A lot of people out there like to sound smart by using their models to claim they do. And that does not contradict the use of technicals to show you how the indexes or how a stock is actually performing. And based on historical trends, what may be likely to happen going forward. But nonetheless, some of these fundamental predictions, index targets, it just really doesn't help you. It's a bunch of wheel spinning most of the time, and I think at worst, it can really harm individual investors. So let's see here. Got a few things up there on my screen I didn't want to have there. Let me just refresh the screen there in Tiger TV. Got a few little things popping up. Okay. Speaking of risk management, my colleague over at moneyshow.com, and if you don't know that site, I suggest you check it out. I know that Tom does some projects with Money Show. I also work with them quite a bit. He was over there at signing his books over at the event in Orlando a couple months back. Got the chance to run into him over there. It was a lot of fun, and also a lot of TFNN listeners that I got a chance to meet over there. One of my colleagues who writes for moneyshow.com, Igor Greenwald, terrific writer. Now, he wrote a column over there that you might want to check out. It's an interesting read. It's about how avoiding loss is a greater emotional driver for most people than seeking gains. And I guess you could interpret that kind of information by saying, well, okay, then I need to fight this emotion by taking more risks to capture gains. But I don't think that's not always wrong, but I also subscribe to the school of thought that risk management is the key component of successful trading or investing. And it's a particularly relevant topic when you're looking at low-priced stocks like we do on this show and we do in the newsletter that we'll be launching very, very soon here. Getting excited about that. Anyway, it's particularly relevant when you're looking at low-priced, high-beta, more volatile small caps or lower-price names. Cutting losses or taking profits is absolutely key to protecting your capital. And my friend here, G7, loss hurts much more than gain makes happy. And that's the point exactly that Igor was writing about in this article. I do suggest you, when you get a moment, cruise over to moneyshow.com and take a look at Igor's article. He does he does present some data, some historical tests that show that. And I think he's going to be doing a series about that. So it should be interesting to watch. So let's see. Let's turn. I've got couple minutes left in this particular segment right here. And I want to just kind of turn to some stocks. We're going to look at a lot of stocks today. A lot of days I have a guest. I don't today. I'll be sitting in for Larry tomorrow on his show, Trade What You See. And I have a terrific guest lined up, Edward Hornstein, who's a hedge fund manager in New York City. And Edward is a terrific trend follower, market historian. Really enjoy speaking with him. So you want to tune in tomorrow and listen to that interview with him, which will be, let's see, that show is at noon Eastern tomorrow. So make sure you check that out. Let me give out the phone number, 877-927-6648, 877-927-6648. I've got about a minute here. I'm going to start with a chart, and then if we don't really finish with this, I can always come back to it. This one is PKT, is the ticker on this one. This is Procera Networks. Now, what's interesting here, Apple is not the only stock that has been rising to new highs as the market has been in a downtrend. Procera is, they make gear to facilitate network data transmission, and that ticker there, PKT, that's a little nod to the data packets that are transmitted across networks. So what's interesting here, what kind of few things caught my attention? I mean, obviously something that does have a good track record of earnings and sales, and I do use that as an initial screener. Does not always factor into my buy decisions, but sometimes the track record of earnings and sales growth, as well as some of the estimates, do factor into my screening. And no, that doesn't contradict what I just said, because if there are good estimates at the moment, that can show you the degree of confidence that the institutions have in a stock and could show you if they are willing to buy or not at any given point. Okay, you know what? Let's come back. I want to show you a couple things on PKT after the break. I'm Kate Stalter. This is the Small Cap Roundup. Be right back in a few minutes.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you seek to maximize your returns. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume and the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, FEAR stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
X-Story Gold Mines, an NYSE Amex-listed company trading under the symbol XG, is slated to be the newest gold-silver producer in Argentina. X-Story is forecast to produce more than $250 million in bullion annually, beginning in 2013, at a cash cost of less than $200 for each ounce of gold produced. That forecast will make X-Story one of the highest margin operators in South America and a sector leader in the mining industry. X-Story has $50 million in its treasury, having spent over $60 million to date on drilling and engineering. The ultimate size of its Argentina discovery could be determined by year-end, as results from the 6 drills operating at the site are fully assessed. To find out more about X-Story Gold Mines and their exciting growth potential, click on their banner on the front page of TFNN.com or check them out on the NYSE Amex under the symbol XG.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
And we are back with this segment here on the Small Cap Roundup. I'm Kate Stalter, 877-927-6648. Give us a call. We can talk about small caps, ETFs, earnings season, IPOs, a lot of relevant things that factor into the small cap and low price universe. So I've got a chart up there. I started to look at this before the break there. PKT, Procera Networks. Now, a couple things on this chart that were pretty interesting. What you had back here, and this was in the summer last year. Let's see here. Back in, let me just get the dates on here and hope I don't mess up the chart too much. Okay. So earlier this year, you did have a little correction. This chart doesn't really go back far enough, but you did have a correction last summer, that big market downturn. We all remember it. That did undercut the low of the prior correction. Okay, so that is a very, very bullish indicator, because what that means is it really does allow new money to come in and buy the stock at lower prices. A lot of the value investors, we talk to a number of the fund managers here on this show, value fund managers. As individuals, we can invest quite differently from the way they can, but it's really valuable to hear their perspective, to know where they are coming in and buying shares that look good to them, and eventually these do go on to become big winners. Sorry, I got a little distracted there by by Steve's comment there, the Tiger Den. I want to read it to everybody because it's a good one. Those who have knowledge don't predict. Those who predict don't have knowledge. From Lao Tzu, 6th century BC. I like that. I like that very much. That's thank you, Steve. You can always count on Steve for a lot of these terrific insights. That's a good one, and that's I think that's exactly right. It's who knows. Who knows what's going to happen? So they make predictions. Okay, back to PKT. Just talking about what I was mentioning a moment ago about the value investors, many of these mutual fund managers that do come in and scoop up shares at a lower price. they don't necessarily buy at the price that individual investors need to be. We can wait for the stock to show more strength before we get into them. And I was mentioning our guest tomorrow, hedge fund manager Edward Hornstein. You know, he buys the same way. He watches for strength in the stock. He lets some of these value buyers come in there and begin to set the stage for the uptrend, and then takes advantage of that. So but that's why it's so interesting to hear what these guys say, because often we really can get some early warning signs of stocks that can show up on some of our screens down the road. So anyway, Procera Networks, interesting base progression on this one, rallying to new highs. To me, this is not at a buy point right now, way too extended from the last correction. And it's had a nice rally since, right back in here where I'm indicating earlier this year, back in February. And that's this is what you have right in here, a nice rally higher. So anyway, nice chart here on this one. Would like to see a pullback. Earnings season, obviously, on the horizon. And you've got here MFRM, Mattress Firm. Okay. So this one reports earnings after the close today. And this is Mattress Firm. Let's see here. It's a chain. There's one right here down the street by me in Santa Fe, New Mexico. This is they have more than 600 mattress stores, 25 states. They're rapidly expanding. The stock went public very recently, back in November. So it missed that whole pullback last summer, did not have to suffer through that. And you did have kind of, let's see here, if I can go all the way over. So you see here in the December area, after the IPO, did kind of pull back a little bit. And then it did rally. Let me move back over to the right side of the screen. This thing has just been traveling to new highs. As I mentioned, reports after the close. Analysts expect the earnings to wake up. Just got to get a little corny here, not to look so sleepy anymore. Coming in at 99 cents a share this year, expectation versus a penny in 2011. It showed losses for a few years. That's not unusual for a company to show some losses while it ramps up prior to going public. You see that a lot with biotechs in particular. But this is a brick and mortar business. They need real estate and inventory. So this is a terrific chart. A pullback would seem to be in the cards. But often, if there is some good news in the report, you'll see even more buying after that. So this is one that I'll probably continue to track. All right, stick around. I'm Kate Stalter. This is the Small Cap Roundup here on TFNN.
Folks, turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more. And that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion. And for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. And these are the best kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk and you get all the benefit. Go to the homepage at tfn.com and sign up today.
You've heard Tom O'Brien on the air, and you've always thought about trying out his newsletter, Market Insights. Well, now is the perfect time. For a limited time only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom O'Brien's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. If you decide to cancel within the 2-week trial period, pay absolutely nothing, and keep Tom's book as a free gift from us. Tom sends out his daily newsletter each morning by 9:30 a.m. with trade recommendations conditions, including price targets and price stops. As recently as March 21st, Market Insight subscribers closed out a position for more than a 25% profit in just over 2 weeks. To get your 2-week free trial to Market Insights, along with your free copy of The Art of Timing the Trade, your ultimate trading mastery system, visit the front page of TFNN.com. Supplies are limited for this one-of-a-kind special, so act today and don't let this opportunity pass you by. Offer only valid for new subscribers. In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices, along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
All right, we were having a little fun with charts there during the break. I'm going to get a new chart program coming up pretty soon. But stockcharts.com is a nice free program, has quite a few features. Unfortunately, they don't always translate so well into Tiger TV, just given all the dimensions that we're working with here. In any case, I put up a daily chart of something called Titan Machinery. And what I want to talk about in this segment is earnings season. So we were just talking a little bit about Mattress Firm reporting tonight, and of course, as most of you know, that is not going to be the one that's going to get the lion's share of the attention. Alcoa is the one everybody's going to be looking at, and I say meh to that. Meh. That's my technical term for Alcoa. So I just briefly, I put up a chart up there. Now, in the macro sense, you can analyze commodity prices, industrial demand for aluminum, Chinese economic growth. But you get a lot of great theses in there that don't change the fact that this is an ugly chart. And the dividend yield on Alcoa is, I believe it's 1.3%. So, you could get more than that with some of the pipeline MLPs. There's other ways to get yield. So this is just not really a stock that interests me at all, and apparently a lot of other people feel the same way, because you can see that investors have been piling out of that stock in the past several months. So it's really, but that is going to get the attention. It often, you'll hear it sets the stage for earnings season. I don't know. I think it gets a lot of the initial attention, gives everybody something to talk about in the early phases as companies begin to report, as the pace of earnings heats up. But eventually, when you do have stronger performers, stronger sectors, I mean, materials has not really been performing well. So when you do see some stronger sectors coming in there, that could be pretty exciting. We just looked at Mattress Firm, and that comes from consumer discretionary. That's the leading sector in the S&P 600, the small cap index, the S&P 600. That's the leading sector year to date. So pretty interesting. There are a lot of great opportunities from the small cap retail area. I want to take a look at some of them actually now in the remainder of the show. Just take a look at some of these small cap names. Now here's one, Titan Machinery. Now this is not really a retail stock, but they do report earnings. So it is something I wanted to take a look at. I mean, well, I guess they're not consumer discretionary, put it that way. They do operate agricultural stores, but it's really more for industrial, farm equipment, agricultural equipment kind of use. So it is not a consumer discretionary, even though it is a retail. Okay, so you do see here on the chart, nice little consolidation in recent weeks. This one's scheduled to report April 11th, so that would be tomorrow. So what's interesting about this one is another of these examples that undercut a prior low back last summer when we had that steep market-wide correction. And it's been climbing out of that. Nice little, actually, if you go right in here, this is a daily chart. I'm going to move over to a weekly for some of these chart analyses that I want to do right now. So you can see that a little bit better here. You can see how it has undercut the prior low right over here. So that was pretty bullish. So that looks good. See that? The low there, this low undercut that. Now it's forming another little consolidation, more bullish price action. So this does have some potential here in this particular company. Will be interesting to hear what the analysts say about earnings. Small company, not one you hear too much about. Market cap of about 600 million, very thinly traded, about 193,000 shares a day. High beta, no surprise, about 1.87 on the beta for Titan Machinery. So actually reports earnings later this week. Could be one to watch. Could be one to watch, but as always, as I was cautioning earlier in the show, these smaller, high beta names, you got to be careful. You just got to know. Take profits. Don't get greedy. Manage the risk. Take profits. Often, maybe I'll put in a first target. Yes, to use that word, but for individual investors, it is part of the risk management. Maybe a first target at about 10%. And then reevaluate from there, see how the chart is performing. And of course, if the stock falls about 10% or so from your buy point, you want to get out of there. Sometimes 7 or 8% on some of the more liquid stocks is a good stop if it falls that level below the purchase price or even less. But you know what? If something's got a beta of 1.87, you could get shaken in and out of that thing so fast. So it's often not a bad idea to give some of these names a little bit more latitude. Okay, let me move on to another name here. Expected to report. Okay, let's stick with our theme of mattresses that we started out with earlier with Mattress Firm. So here's Mattress Maker, Select Comfort. Now that's just another beautiful chart. That's one that I've been taking a look at for a long, long time. We've definitely gone over that on this show. So here again, let me just show you the common theme that you do tend to see. So this one had a pullback. That was back in the summer over here, and it undercut the prior low. You can see that over here. Has had a nice rally, dropped back, found 50-day support, and continued to rally. So let's see here. This has been plagued by the same thing we've just been hearing about for months and months, which is low volume on the rally. And that's just continued to happen. You know, as I mentioned last week, and I'm sure everybody, we all know about this, but a lot of the quantitative easing has resulted in money coming into the stocks. They've been rallying out of some bases where maybe you wouldn't have normally expected them to, and it has been accompanied by some lower volume. So not at all unusual to see that. This one, could it be consolidating a little bit? Maybe. Could be. It's flattening out a little bit there on the chart. So you would like to see some action one way or another. Actually, what I'd like to see here, ideally, and I'm not predicting, I'm just saying here what could be the ideal action, is a bit of a pullback. Maybe it's kind of tagging that 10-week moving average, the 50-day moving average right now. So it'd be nice to see it kind of trend along there for a little bit. Nice orderly consolidation. I like the tight trade. That shows you that the institutional owners have been holding on to shares rather than trading out of this thing. So it reports earnings next week, supposedly. And then that could be off by a day or two, but that's just according to what I'm looking at. I don't have time to look it up right now to get the exact, but it should be next week, and that should be a very interesting one to see. This has been a good performer. It's approaching the $2 billion market cap. No, you're not going to see a lot of breathless headlines about that when it reaches that number. Almost $1.9 billion, moves about 1 million shares a day, so some good liquidity in this one. This is one I've just liked for a long time. Hasn't offered a buy point back since December, so it'll be interesting to see if it does offer a new one soon. Okay, along the lines of the furniture trade. Let's see here. Oh, let me read my comments here. Bob Dahl, this is G7. Bob Dahl from BlackRock. No correlation between price and volume on up markets. Yeah, I understand what Bob is saying, what you're saying there, G7. I'm just reading the comment. No correlation between price and volume and up markets. Volume is an indicator that I tend to watch. There are a number of money managers who do trade on volume and use that as an indicator. It does show you institutional buying, regardless of whether or not you're looking at program trade or high-frequency trading. We have enough of the money managers here who do come on the show, and these guys do buy large numbers of shares, and if they like a stock for whatever reason, you will see their buying patterns in there. So that's where it comes into play. However, in recent months, that effect has been diminished. It's not hard to see that on the charts where you have seen these low volume rallies, and it just hasn't been as much of a factor lately as it has been historically. So it's some interesting point to take a look at there. All right. Now, I put up a chart for Ethan Allen. This has been a good stock, except you do see where this week it's plunged beneath one of its key trend lines over here. I'm showing it to you on a weekly chart. So actually, let me go over to a daily. This would be better viewed on a daily right now. So you can see where Ethan Allen has plunged beneath that 50-day line, consolidating. This has had a pretty nice run-up. Let's see. It formed a constructive base, undercutting the prior low. It's been running up since October. And if you remember, that was the October 4th market low. So this one has been running up roughly since that time. Let's see. Over here on the chart, I can show you, if you're looking on Tiger TV, where you see it had that shorter-term 50-day line cross the longer-term 200-day line, so that was looking good. And right now, this one, just let it consolidate. Let's see what happens with the earnings report. Let's see, that's expected later this month, around the 23rd. So that could be an interesting one to see. The estimates are still good, as always. You know, it's funny because we've all noticed this. Frequently, it's the outlook that the company offers when it issues its quarterly report that can have more of an effect on the stock than what it's actually done in the past. Markets being forward-looking, of course. You know, and a lot of times, too, there will be something that perhaps deterioration in the margins, something that can be an indicator of some trouble in paradise. So a lot of things contained in the earnings report that have potential to send a stock higher or lower. So for right now, we'll just let this one consolidate. Just let it run its course. Now, here's another one, and it's called Rent-A-Center. I really hate these business models, but I'm going to put this up here. Let's see. I believe the ticker RCII, Rent-A-Center. So you've got some interesting base formations on this particular stock. Nice little areas. I'm going to put it back on a weekly. I think this will be easier to view on a weekly chart. So you have seen pullback, good trending here above key moving averages, retreating just a bit right now. I just, you know, even though the chart looks pretty good on this one, this is one of those, you know, I always talk about not letting your opinion dictate, but sometimes you just get some of these business models that I just personally find pretty offensive, and maybe you have some like that too. I know a lot of people object to cigarette companies. I can understand that. These Rent-A-Center models, you know, charging people exorbitant interest rates to rent stuff, to me, it's just really preying on some of the vulnerable in society. So, I don't know, not such good karma on some of these, but it is an interesting chart. And they do report earnings later this month, so just kind of tossing that out there as another consumer discretionary. A lot of these, we've been taking a look at some of these home furnishings names today. We just saw Ethan Allen, Mattress Firm, Select Comfort. So people are sprucing up their homes, I guess, or their rentals or whatever. People seem to be still spending money on some of that. Let's take a look at the restaurant area, the casual dining, as it's known. And one of my favorite tickers here, this is a nice one, EAT, Brinkers. So they operate Chili's and, what's the other chain? What's that? There's an Italian chain. Begins with an M. It's on the tip of my tongue. Let me check this. Maggiano's. That's it. That's it. They operate some of these chains. So that's an interesting stock. I like this chart formation quite a bit. You see it starting to pull back a little bit. And again, you know, perfectly normal. These times of market downtrends give stocks a chance to kind of refresh, form some constructive bases. I believe I mentioned it last week, but it's always worth a reminder. You know, one of the data points that we used to discuss back when I was with Investors Business Daily is the fact that the bulk of winning stocks in a bull rally emerged from consolidations they formed in an overall market downturn. So this is something right here to keep an eye on, just how EAT, Brinker International, continues. They're supposed to report earnings around April 23rd. So an interesting one to keep tracking right here. I like the chart action. Okay, there's Tom telling us this segment's over. I got time for some calls in the last segment, 877-927-6648. We'll be back. Take a look at a couple more small cap charts. Stay with us.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit tfnn.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Great Basin Gold is a mining company engaged in the exploration and development of 2 emerging gold properties in Nevada and South Africa with a total resource base of more than 23 million gold ounces. Great Basin's Burnstone mine in South Africa opened in February of this year with a resource of 20 million gold ounces, becoming the first mine to open in the historic Witwatersrand Basin in the last 30 years. The Burnstone mine is projected to have a 25-year mine life and is fully financed with production anticipated to be over 250,000 ounces per year at a cash cost of only $450 per ounce. The Hollister mine in Nevada became fully integrated in the 4th quarter of 2010 with annual production estimates of 110,000 ounces of gold per year over the 8-year mine life at a cash cost of only $527 per ounce. Great Basin Gold is cash flow positive and trades on the Toronto and New York stock exchanges under the symbol GBG.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, back with our last segment today here on the Small Cap Roundup. I've kind of been looking at some consumer discretionaries just because that's something that caught my attention yesterday. I like to look at which sectors are leading in the various S&P indexes, the small cap, the mid cap, large cap, of course. And in the small cap, year to date, quarter to date doesn't tell you so much because we're only 10 days into it. But year to date, the consumer discretionaries have been performing very, very well. And that's just kind of funny because I guess in a somewhat humorous way, people talking about the poor economy, and nonetheless, everybody's shopping. You know, the stores are doing well, and I've mentioned this before. You could definitely make an argument that Apple is a consumer discretionary. I mean, who's buying these products? It's not a tech in the sense that, Rackspace or some of these Procera networks that we looked at earlier in the show. It's not a tech in the sense that those are techs. It's a maker of hip, cool consumer products. I mean, I got a bunch of them around me. I'm using 2 of them right now as I'm doing this show. So, yeah, consumer discretionaries in the small cap sector too. People are spending money. I mean, isn't it the case that you go out to a popular shopping mall on a Saturday and the parking lot's full? So let's see here. Let's take a look. This is a little bit of a different type of consumer discretionary in that it's autos, but You could still consider it that. This is Penske Automotive Group, and quite famously, there have been some pretty good numbers from the car makers lately in terms of sales. This one operates about 300 dealerships all around the U.S. And also they're in Europe. I believe they're in the UK as well, and they're continuing to expand. So nice chart on this one. I do like this. You've got, let's see, I am on a weekly over here. So you can see where, here you go. There's another example, undercut a prior low over in this area. Nice rallying to some fresh highs recently, getting some nice support above key moving averages. So this is an interesting one. Penske reports towards the end of this month, maybe in another couple of weeks, roughly around April 25th. And this is kind of one of those that is maybe on the line between being a small cap and a mid cap, market cap of about $2.3 billion. Only trades about 486,000 shares a day, though. So, but this is an interesting chart. I do like some of the support on this one. Be interesting to see how this continues to act in an overall market pullback. So let's see here. I've got time barely for one more. We'll just do this very, very quickly. DAVE, great ticker, huh? Famous Dave's. Back to the casual dining. Another one. I mean, this is really quite phenomenal. It is just looking at all these consumer, retail, restaurant charts that are just holding up very, very nicely. This one needs a little bit of time to consolidate. It's still hovering below its prior high from back here a few months ago. And this is one of those that I would still consider a little bit on the low price side, and that's fine. It's, let's see, about $11.40 as of, let's see where it's at today here. Let's see, about $11.40. Nice little kind of, I'll go over to a daily, show you this real quickly. I've got a few more seconds here. And this one is pulling back a little bit, so that could be a pretty bullish indicator here ahead of the earnings on Famous Dave's in a few weeks. This is just a little preview, folks, of some of the stocks that we may end up tracking in the newsletter that we'll be launching here shortly. So stick around, stay tuned. You're going to want to check that out when we launch that very soon. I'm Kate Stalter. This has been the Small Cap Roundup. Tune in tomorrow. I will be sitting in for Larry at 12 noon Eastern Time.